When you are trading more than one currency pair, it is important to be aware of currency correlation and to make sure you are not doubling your risk. So what do I mean by this? Well, for example, if you were trading the AUD/USD and the NZD/USD at the same time, it would be as if you were in two of the exact same trades, since these two pairs usually have a positive correlation that's close to 1. So you may be thinking that you are diversifying your risk by trading on more than one pair, but what you're actually doing is doubling your risk by trading on these two pairs that tend to move in the exact same direction. This is known as overexposure. For example, here you can see that we have two different pairs. We have NZD/USD and NZD/JPY, and they have a correlation coefficient of plus 0.957. So they are very positively correlated, and you can see that their charts look almost exactly alike. When one goes up, the other goes up. When one goes down, the other goes down. So if you bought one lot of NZD/USD and one lot of NZD/JPY, you may be thinking that you're diversifying by getting into different pairs, but you're actually doubling your risk. It's as if you just took a two-lot trade on one of the pairs. And if you were in a buy on NZD/USD and a sell on NZD/JPY, that would be super counterproductive since you would lose about the same on one pair as you would profit on the other. Now let's look at two other pairs. We have the Euro/NZD and the NZD/USD. And you can see these have a negative correlation coefficient of 0.927. That means that when one goes up, the other goes down. In fact, let me just flip this top Euro/NZD chart upside down for you. Look at that. You can see that when I flipped it upside down that these two charts look very similar. They both go up and down at almost the same points. So I'm going to flip this back now. These are very negatively correlated pairs, so when one pair goes up, the other pair goes down. It's the same concept as very positively correlated pairs. If you place a buy trade on both pairs, that would be counterproductive because as one pair goes into profit, the other is going to move about the same number of pips against you. And if you place a sell on one pair and buy on the other, you're just doubling your risk. So what I want you to get from this section is to just be careful of which pairs you are trading at the same time and know whether or not they are strongly correlated so you can avoid increasing the risk on your account.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.